This is Justin Pulitzer. This is my weekend video for November 16th, 2014. And I wanted to kick it off with a review. We'll start in the SPYs. You can see there's a bit of a change. I took the volume out from below. I've expanded the area of the charts, and I added in back in volume profile here. So let's snap right to it. You can see in the SPY here, we did make a lower low here, which had been concerning for me, but we have now come up and made a higher high. So for me, any pullback here is still quote unquote healthy as long as we stay over a few reference levels. First of all, what's important to me is this 201.90, which was the old high here. And you can see we had this Japan liquidity gap and we have that old high. And that area to me is very important on any start for a pullback. For me, though, I realize it's a big range here. We've come a long way, but this 199.06, which was a potential left shoulder, to me is really key. If we can stay over that on any type of a pullback, I realize it's a decent amount point wise, but I think that would still be within kind of quote unquote reference acceptable pullback corrections. Anything below there starts having me think a little bit to be a little bit more wary. My guess is by the time if we do come back down here, although these markets do tend to move pretty quick, that the 50 and the 100 MA might move up to support, and you can see the 20 MA is here, where I had discussed in last weekend's video that we were a little bit extended from the from the 20 MA. I had said that anything over $5 or $6 in the SPY was a lot, and we were, I think, $8 at the time or something insane. And you can see the 20 has caught up a little bit, as price has chopped and built higher. And we're still kind of overbought from the 20 MA. You can see it's down here at 199.72, and price was up here at 204. But at least this is closed a little bit, and the distance isn't quite as extreme. When that gets very sharp, there tends to be wide. There tends to be a big pullback. Now we're kind of just extended, not super extended, if you will. My take on this chart, though, is that it is looking a little bit tired. It would not shock me to see price sag a little bit, although we are kind of consolidating a bit. So if it does wind up chopping for a couple of more days, it probably will work off some of this excess and then have potential to move even higher. For me, the SPY is a little bit harder to chase here. I'll show you what else, though. I'm looking at the diamonds. This is also looking very similarly with coming up and chopping. And you can see the former backside of this old uptrend that had gotten snapped here would come up a little bit higher. So there might still be a little bit more quote-unquote gas in the tank for the market to have some type of a spike move higher and then set up for short. IWM, on the other hand, is showing a little bit more weakness. You can see we had the Japanese liquidity event. We came up. We did test above, and I have been discussing this 117.37 level as a really, really important level for a while, and that any moves over there have been unsustainable. I do think, though, that if the tape rolls over, IWM will probably continue with that bit of a relative weakness and may come back and also test the 20. But if we can you see we closed a little bit below here after Thursday and Friday's close. But I would say anything over 115.88 puts the IWM back kind of in healthy territory. And if we can really take these highs, then I think it would not shock me to see a move back up, closer to the 121. But again, I need to see the move over this gap high for that type of a move. Anyhow, like I said, the indexes have just been chopping, so there really wasn't that much to talk about. I wanted to reference them just to show you what I'm thinking. But let's get into some of the Momo, and let's discuss Apple. Apple has been in a bit of a defined channel for quite some time. You had this earnings gap up here, this sideways action, high, and then it got itself into this channel pattern. I had said that I had actually said that the high I thought would be in the 103s. It wound up being for quite some time. You had this very sharp pullback and just this kind of choppy consolidation range. And I had been discussing for a while that I thought anything over that high would put 109s into play. And you can see we had this earnings gap. It held, and the stock has kind of just ground higher. It got up to the upside of the upper channel, and achieved the 109s like I had said we would, which is always nice. I had used that opportunity to sell though. And I had cited that I thought that we were in a little bit of danger anytime we've been chopping on the upper side of this channel. Like you can see up here, it's met with a very severe pullback that has obviously provided a better entry price to get in, but also saved some pain if you were kind of late to the party. However, Apple didn't do that. It chopped in range, and I had posted on Twitter that I thought anything over this kind of spike high, this 110.30, actually was a long again, and that wound up being correct. I've sort of have taken the liberty of drawing a channel here. I don't really have a defined reference top to set the second point, but what I did is I drew a uptrend from the gap low to here with the kind of the launch point, and then just drew it as a channel and used this high here to draw the top. So you can see Apple is starting to move a little bit parabolically. The size of these bars are starting to get a little bit big, and it's starting to move up really, really sharply. Not to say that there isn't more room for it. It could just blow through this channel. Like I said, there wasn't a second point to really draw this in, and this isn't exactly the, isn't very wide. Like you can see this channel was a little bit wider. But it wouldn't surprise me to see if Apple kind of cools off a little bit and just chop sideways, maybe to the mid channel, which I think would be a little bit healthier. I mean, it may still have some type of a spike move, but if it does have some type of a very big, large, final bar here, I would be looking for that to really unload. I would be in major caution mode. I think anything, again, if Apple stays over this 109.03, let's just say 109 to 110.30, anything over that range I think is still pretty bullish, particularly if it can hold a pullback here to 110.30. That to me would be, again, a buy point for a bounce. It's right or right out. If it breaks and it comes back down into the channel, then we'll start talking some other levels. But as of now, obviously Apple's still bullish, although I would like to see some consolidation and it just not go completely go parabolic. Amazon isn't one I speak about very often, but it is setting up for an interesting chart pattern. You can see we held double bottoms here, basically. This one undercut it just a little bit, but price rejected, and we took out these kind of smaller downtrends. Well, let's not jump ahead of ourselves first. Amazon had kind of been in a bit of a wedge pattern here, and you can see this old uptrend line finally snapped. We came lower, and then we had the double bottoms. We now came back up over these. I kind of drew some fans here, and we are retesting the 200 MA as well as that prior back of that prior uptrend line, and you can see there is a dominant downtrend line here that is coming into play right up here into the let's say it's the next day, so it'd be a smidge lower, like around 235 or so. I think if we can pierce through there, although we are kind of coming up, it's getting a little steep here. You can see there was a bit of a short covering rally already. I do think if we can get over there, the stock is probably bullish again. Although it would behoove me to probably want to buy it more on dips than chase this after having this kind of a steep up move. This is the second fan that I would be looking for as some possible resistance. So if we do have some kind of spike move, a continuation, and you're already long, I would be looking to get out here kind of closer to, like, say this is 247, maybe 248 level. There was a reference high here. You can see this was at 249.38. So if anything kind of approaches there, you might want to use that opportunity to book some profits. Although I do think Amazon is probably going to be bullish into the fourth quarter, I would definitely prefer to buy a dip than assuming we can get this breakout. If we fail here and come back down, the stock is a hands off. I couldn't touch it because I would see that the 200 MA repelled it. It couldn't even make it to the downtrend. Or if we just get to if we gap on Monday to the downtrend and then it pulls back, I would be very, very cautious with that. But if we can extend and get above here and put in some sideways action or maybe some light pullback, then I would say, after some consolidation, Amazon is probably back to being a buy the dip stock with caution and those caveats. One that has been the super bull is the BABA. I had discussed that 110.14 was the 1.618 Fibonacci extension. It got it to the tick and pulled back, and then we have since blown through there and got up into this 120 area, and we've done this kind of like sideways action. I think that the first buy point for me, obviously BABA is off of a new high, so it's still pretty bullish, would be somewhere on this primary uptrend line. It is a little bit steep, but again, it would be a right or right out play. So you can see if we kind of chop sideways and come into here, or if we do wind up coming down a little bit more. Anywhere to me on this uptrend line would be a buy the dip. Possibly a sale of short dated out of the money puts if you want to play it that way for some type of a move back up within range. But but I would say the easier money in BABA has probably been made here. You definitely want to see some consolidation and maybe some pullback. I would think it's an absolute screaming buy if something happens where there's some type of a market event and we have some type of a more sharp pullback and we get a move back maybe down to the 100 to retest that IPO breakout level. I'm not necessarily counting on that. It's a pretty big move point-wise, and this stock has been absolutely bullish, and I think there's a lot of people who are looking to buy the dips. Although I'm just judging from what I'm seeing on the stream, people are kind of chasing it a little bit. One thing, though, that has been kind of a bit of a tell for me, and that tells me that BABA might have some more room, is YHOO. I don't remember who it was on the stream exactly, but someone had asked me right here, I think it was this day, actually, that what to do with it. They were involved in some type of a YHOO spread, and the upper strike had gotten blown through, and they were still up on the trade, but were kind of debating rolling it or not. And I said to just book it here. That why get yourself, if you have a winner, it's a day to expiration. Why get involved with the rolling? And man, somebody owes me a couple of drinks. That saved you an absolute slaughter. This was a professional gap. It might not be so obvious because you were up for a couple of days, but look, you gapped above this high, and once you took out the high here, it never looked back. The stock is absolutely ballistic. I want to show you something, though, that has me a little bit concerned with this stock if you're still long. And again, I took the liberty of kind of creating a second point just because we're in clear air here. It's real hard to discuss tops and stocks that are in clear air. I had said that I thought that the first target here was 47.63, and it's really taken that out. I mean, I know the next I had mentioned that we might get to 50, but honestly, after 47.63, there was really no technical resistance. And not that this is resistance either. This is just a Fibonacci extension. But if you take a look, if you connect these lows and you redraw it as a channel from, and you kind of connect from this point, you're coming up to an area that might be some problems. It's really not that much higher either. It's in the 52.77-ish level. So you might want to be looking to take some profits in YHOO, or at least waiting for some type of a pullback, maybe to the 44 area. I don't know if you're going to get that much, though. I mean, this stock has been absolutely on fire. Maybe there's some news, though, or maybe there's a sharper BABA pullback. I would think, though, that some type of a move, probably close to the 20, would support the stock. That's really where this real launch kind of took place. There's probably some buyers that are interested here, but for me, I would be more interested if I was going to be playing, to initiate a new long a little bit lower. I definitely think that there would be room for it if we achieve this, and maybe that would coincide well with coming back down into the middle of the channel at that point, somewhere over there. So that's my take on YHOO. Facebook is one that longer term I'm really bullish on. I don't think that the all-time high of this stock is in by any mean, but the price action has not been really bullish. I had said that I thought the trend down here had been a buy. We played it long, and then I decided that around 80 it was time to bail. 79s and 80s. I was a little bit early here, but it was right. I had actually discussed this being, once they had their earnings and that they, once a stock a momentum stock, just remember, if you remember this will save you so much pain. Once a momentum stock cannot go higher on good news, it's going to go lower. That's just how it is. That's how these stocks work. They're like, think of them as sharks. They have to have continuous forward motion. It's like football also. You have to have continuous forward motion, or you drown in the case of a shark, or in football you give up possession of the ball. So look what happened here. We came down. We held this older trend. And we've been just chopping. We tried to break up into the gap. We got close and failed, and have just been in this chop. We took out this kind of intermediate uptrend line. We're still holding primary trend line, but it's kind of getting feeling like fingernails a little bit here. This 100 MA here supported over here with a little bit of noise below it. You can see here we closed over it. Here we opened below it but got back closed above it. So I would say the 100 MA here has got to be your litmus test for long. If we start getting any closes below that 100 MA, I would be real cautious and would think that there is a move lower coming. Possibly, this is building out at a bear flag, and then we want to maybe retest this 70 low. I don't really dislike Facebook. I think that the stock is going to fill this gap at some point. It's just sort of a matter of when and from what level it has to come from. It may have to do some time in the wilderness. If you look at the stochastics, there's still some danger. I would feel a lot better with this if we got below the lower line as a buy, or if we were just chopping if we just chop sideways here and the stochastics continue to roll over and the price kind of just chops here, then once that bends back up, that's going to be a screaming buy. But for now, I'm just sort of on the sidelines with Facebook. I think that you can play it long if you're going to do it maybe with a call spread. Premium is cheap, and then I would think that that's your defined risk way to play this if you want to play for some more upside. But I would like to see some type of a break back above this area. I think this bar here is sort of the key. Anything above this 75.86 to me would be a little bit more bullish. You can see that was where we kind of failed here. It would take you over the earnings gap body. If you want to play this really just meat and potatoes, keep it simple, stupid. 76.88. I mean, that's the gap high. Any move into there, you should fill up the window. Particularly after this many days of sideways chop and consolidation. I think you've had a lot of people probably who were long and wrong, who've just given up. And a move over this bar high here for me would be a long, particularly after this many days of consolidation. Any break though below this low here, that's this 72.90. I think you see 70.32 and possibly the 200 MA. I've been talking about this for a while. If we do get down there, I think 75 puts to short are probably okay. I think that I really think that the 76.5 and the 67.5 and the 65 puts short will wind up being winners. They may take a little bit of pressure, but I think that area is kind of like a safe area to start selling. I would really love to see, if I had my druthers, for this 200 MA to come up back to the old low, see some type of a false breakdown in Facebook, put in that double bottom and then kind of rip back up. I doubt it's going to play out that way. Nothing ever works out that storybook. But keep your eye on this one for some type of a break above, particularly if we take out this high. And then for me, if we take out this low, look out. Be a little bit cautious. This has been an overbought stock for a while. It may have some lower moves to go. Twitter, if you take a look at these stochastics, is I guess swimming, I don't know, with Jimmy Hoffa, or I guess he's buried under the Meadowlands, right? Well, swimming with the fishes, so to speak. I mean, this thing has been taken out in terms of stochastics, but my concern with this is also Facebook. Like, we've been kind of in this chop pattern. This one still has a pretty high short interest in it, and you can see just what had happened. There was some type of an analyst day. We had this squeeze up after like sort of a look below and fail here. And then the next day we gapped up. I had discussed this, gapping into a downtrend line being a short. And this one, I didn't believe this rally. I was talking to some people on the stream about this, and he also on private, and that I said a gap up to the downtrend would be a short. Man, wow, was it. I had gotten out. I actually covered really well at 40. It wasn't the dead low, but it was within 5 cents and was pretty good. I honestly, it was kind of just luck picking 40. It was just kind of a round number, and I chose it. I was actually considering staying short this day, but I don't know. It was a nice move, and I just felt like taking some money. And you can see the next day we had a bit of a bounce, a pretty nice one. So this is how you play this. I think that this low here is a key pivotal low. There's not a lot of excess. You can see there's not like a long tail. So I think if you take out this 38.81, there's room down to the, I don't usually play 78.6 fibs, but for my point here, I think 35 is a key level. I think that that will actually hold in Twitter if there's some type of a bust lower. You can see it's kind of close to these. There's some reference lows here in like 35, 36. You have this high, this kind of like breakout of consolidation area. So I think that that will hold. I mean, if the market really rolls over, there is room down to this 29.5. I don't really see that happening so fast, though, unless there's a lot of pressure on the market. In that case, yes, I do see it. But for me, I will be actually looking to test long somewhere around this 35 if we happen to have that break. The other move would be a move over this dump bar high. If we can take out this 43.95 and move into the gap over, I actually would take it long over here as a little bit of an anticipatory long. If we can get back over that high, and then I would add maybe over the 44.58 into the gap for the gap fill, back up. I think it would actually go to 48. I wouldn't go to the full gap fill. That to me was a very important level here. That was the high of the last earnings gap. I think that that will attract a lot of sellers. So I would be riding it for that $4, frankly. I think that that will work up. So it seems like we're paying for the next $4 or $5 in this stock. You know, it's either going to be up, down below here or up above here. So that's how we're going to be playing Twitter. If you don't happen to catch me on the stream and you see those price moves, that's what you know is going to happen. Google is one that went from being the darling to the villain, right? I mean, this stock has been a choppy kind of mess. You can take a look. It's been in this bit of a downtrend. I had discussed coming back up into the downtrend and into these reference lows somewhere in here being a short to kind of layer in. It wound up working here really well. Although I will tell you this, you do have this dump bar, a bit of a rally back up, and you're kind of just meandering here on price. This is not what you want to see, frankly, if you're short and you're really pressing for this thing to bust. I would be watching this low here. I think you can press if you break the 549.35. That would take you below kind of like the 550 strike, you know, quote unquote option strike, and back below the 61.8 fib. And then I think you could probably get the stock to fall apart a bit. But you do right at the moment have double bottoms. You kind of just came back up here, and it's been a bit of a back off, but you keep retesting it, and you keep retesting it from lower levels. To me, what would be a screaming buy in Google is if you get some kind of move that nobody expects with some type of a gap, maybe on news, and it took you up over this 568.73. Like if price opened here, well, you do have. I will give you the bit of a caveat here. You do have a 50 and a 200 MA, so there might be a little bit of selling, and you still have this type of a overhead supply. But what might work is if the gap isn't that extreme. This will wind up being a sell, I think, initially, but and you might just chop it. It might have to do some backing and filling. But I do think if there's some type of a move up over here that nobody is expecting, and I do think if it was in a gap fashion, that this could really catch people off guard, and Google could play a little bit of catch up to the market, particularly if you see a back off in Apple. Look for that confluence event. That seems to be like, I don't know, some kind of like crazy trader psychology that if Apple goes up, Google has to go down lately, and if Google goes down, Apple has to go up. That has been a pairs trade for a while. So let's look at this reference low here, and then anywhere I think over this dump bar high here, which was the real back off, and that would be like what I was talking about, that gap up over if that happens. Over 566.90, I think is a long again, actually, because I would say that you took out those initial sellers, and then the stock is kind of ready to run if you do get over there. One I've been watching, it's a bit of a pet of mine, starting to run a little low on time, so let's try and rush through some of these a little bit quicker, is KMI. I've been watching this as an inverse head and shoulders. You can see the left shoulder, the head, and the right shoulder, and then I had said anything over 39.26 to me was a trigger. We actually did close over there. The stock looks pretty bullish, so if we could stay over there next week, maybe we get a move back up to the to this old reference high, maybe the all-time high. If you did a strict measured move off of this, that would take you even higher. It would take you up to about 45. If you do the math. So KMI to me looks bullish as long as we're over this 39.26. Anything back below there, I'm in a little bit of a caution mode. I wouldn't like to see this high get lost. That was 38.84. Anything above there I still think is bullish, and that's roughly about halfway back of this candle. If we start losing this kind of a little bit of an uptrend, then the trade is over. And if you lose this bar 100%, I'm going to kind of disavow knowledge of the trade. Lululemon has been one I've been watching. We've kind of been forming a bit of a rounded bottom here. And the stock has been actually, I think, trading like there's going to be news coming out. I know that the founder had been discussing some type of a buyout in this stock, and maybe that is coming into play. You can see we came back up here through the 200 MA, and now we backed off a bit. We held the 200. This was on some kind of BS downgrade. I would say anything here over 45.5 is bullish. If we can get back above there, I'm looking for the stock to come back up. Maybe even to as much as $49. We will see how that goes. I would say a trigger up over here will kind of get the squeeze going. So let's use 45.5 if you haven't been in the trade, or this uptrend line. I think you can buy the uptrend line. If we lose that, then let's just call it a day and and move on to some better setups. But this stock, I think, is trading like it is trying to form some type of a rounded bottom and find some footing. We'll see what happens. There's some earnings coming up, so if you have some profits in that, we'll look to book a little bit before the number. But I still think that the stock looks fairly healthy. Netflix. This will be a fast one. Wow, we're on a crazy time frame here. I don't know why we're still on there. Netflix is still in the gap, which is bullish, and it's just kind of bull flagging in the gap. You have a great reference low, some great reference lows here. If you want to use 374.60, or if you want to cut it a little bit closer, you could use this 376.39. Anywhere in this chop range, the stock still looks like it may want to punch higher. If we can get above this area and extend up, maybe we get a move to the downtrend line. I think that if the market stays good, I think it'll go higher. If the market goes down, I think it'll go lower. I think this is a function of the market. But anything over this 366.17 is still looking more on the bullish side to me than not. Let's conclude with the Mac Daddy of all, right? Momo of Tesla. I had said that this had an inverse head and shoulders. We had been making lower highs. I was looking for the stock to come back down and fill up to the target somewhere in this 203.64 to really 206s. That was really my target. We didn't get there, and I had said that a move over the downtrend line here, which we got, was a long. And the stock has it's acting perfectly for higher. It pulled back a little bit, held up nice and strong, had a bit of a inverse bar here, and then on Friday powered up through, and we filled the gap here. I did say I think it's a time to take a little bit of profits and let the rest run, but I think if we get a move, I'll tell you this, if we get a move over this right shoulder, over this, let's just call it 265, because that had been the high. If you want to get really technical, 265.54. I think that if this gets taken out, that the old highs are in play and possibly new all-time highs. I like that it is over the 50 MA. It's back over this trend. So I would think long in this stock. I would like to see maybe a little bit more, I wouldn't like to see it do it in a parabolic sense just because it's moved up a little bit, but I think that this squeeze could get on. There's a lot of squeeze. There's a lot of short still in the name. The stock is kind of built. It hasn't been moving up in a really jerky fashion. It's just kind of been grinding. It's just been a bit of a stealth move, and then bam, up over the downtrend line, close over the 50 MA, mild pullback, and wham. So I'm looking for this stock to go higher. Again, a caveat: if the market falls apart, you got to start using some reference lows. I'm going to be using the breakout bar high of day here. This is 251.82. So anything over that to me is a long. If we get below there, then I'm going to reevaluate. And start thinking that maybe we pull back into the 20 or maybe even into the 50 MA. That seems to have been a launching point here. But you do have a bit of an outside day here and closed up at the highs. So I think that this stock looks pretty bullish. So let's have a good week. Be sure to follow me at Justin Pulitzer. That's my Twitter handle. And like this video if you found it helpful. Cheers.